So the market reacts from the low end of the hourly fair value gap that joins and links with the consequent encroachment of that daily buy side and sell side inefficiency, the blue rectangle. It rallies up, creates a short-term high right there. And then this candle pierces it, creating, when this candle here closes, fair value gap right there. See that? So the market trades down into it here. Once more opens and then runs away. Order block, trades down, retouches it, rallies, consolidates, rallies again into our old shaded area, dips back down. It's going to be resistance here. No, we have now turned the corner down here. I mentioned that if we went to 39.77 3/4, that's the end of the line. That means it's over. The bear sentiment is no longer valid. We would be considering what? The end of bearish sentiment is now bullish. Okay, so go watch and look at the tweets. I'm not going to show you any of the tweets. That's your job to go through the tweets. And in here, I give a very specific candle to talk about a fair value gap, and we'll look at that when we drop down in lower time frames, but it rallies away and comes back down into the buy side of sell side efficiency here with the order block, trades to it there, rallies through, and presses into the afternoon 4038.75 level. On the 1 minute chart, you can see how we dropped from that 15-minute time frame fair value gap. We traded up into it here. This is a Judas swing after taking buy side liquidity. This right here had everybody thinking it's going to rip higher. I was watching several live streamers this morning. They got really animated here. They were actually wishing and cheerleading, hoping it goes higher, hoping it goes higher. And the more they did that, the more I felt confident that it was going to sell off. So I actually sold off a position here, built it larger here, and wrote it all the way down into this level here. And then in here, I went short, building up another position. And then I was calling all this stuff on the fly on a telephone. So I was looking at all the things I look for, doing all the measurements I look for, Fibonacci extensions, levels on higher time frames, working down. And I came to the idea that 39.62.5 would be likely. So I had a limit order to get out at 39.62.75. And it didn't give it to me. The market didn't actually go that low. The market did, in fact, rally here. Look at this high here. Right where the volume imbalance is. See this high here? This candle's high is higher than that one. And then this candle is lower than that one. This is your swing high. The market rallies through. That's a shift in market structure. But ICT, it didn't close above that high. I didn't say it had to. Go back and watch the videos on the 2022 model. A shift in market structure does not ever require a close above a short-term high when it's shifting bullish. It does not require a close below the swing low when it's shifting bearish. Stop spreading misinformation and stop perpetuating ignorance. Okay, this is the reason why people complain to me, because they're learning from dollar menu mentorships, and they're not learning from someone that can do it. Number one, they didn't author it. They have no idea what it is. They have no idea when it won't work, when it's likely to be there, when it's not likely to be there. So that shift here is bullish. So this drop down here, it's a suspect decline. It's a Judas swing in many ways. Where's it going? Fair value gap. Trades in consequent encroachment. Midpoint. How nice is that? The market rallies. Takes out the short-term high here. Another fair value gap. Here's where I stated, look at that candle right there on a 1 minute chart. That candle is your fair value gap. And I said, you had homework today. I gave you a task of looking for find two 5-handle price runs before noon. Well, I know some of you were not able to get 2, so I gave you one today. Here is the candle. That range extended through. It touches it here, 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 here. And then I said, you want to take your attention to 39.82 buy side liquidity, which is this short-term high. Why that one? Because it's going to offer 5 handles. Easy. And it delivers like gangbusters. I'm walking around. I'm looking at my phone. So I'm looking at all this price action here through the lens of what? My Galaxy Note 10. My cell phone can only show me so much, and my 50-year-old eyes, they're not as good as they used to be. So it is what it is. It ran off a lot more, and I thought I was going to be able to catch something in the afternoon, but it did the majority of the run. Right after me calling this live on Twitter, it just left. Elvis left the building right there. Boom. And stock indices went with him. So we consolidated in here, ripped through, took the buy side here, back into that imbalance on the hourly chart. An hourly break of continuity in price action during the New York lunch hour. You can see that here. We drop back down into the buy side about sell side efficiency, hits the order block here. Beautiful rally. Accumulates at the low end of that old hourly imbalance, the pink shaded area, and fair value gap. Rallies once more. And you're going to want to go through your charts and see what these levels are. Okay, this is the part where the lazy students, the casual readers, the Netflix ICT student, you're not going to get this. You might be entertained or maybe bored to death by watching my videos, but I can tell you this, if you don't go into your charts and look for the things I'm annotating here on mine, if you're just simply watching mine, you are not learning. You're not doing the quote-unquote work that's required. This is the part that none of my students that paid me for mentorship, they didn't do these things. They didn't then take that information into live data and watch price print. And if they had jobs or if they went to school or if they couldn't be awake during that time, they didn't make an investment to record price in a screen recorder and then study it that way. So there's no excuse, zero excuse for you not to be going into your charts, because if you don't do that, you're not going to get the blue ribbon results you're hoping for at the end. Market creates a decline in here. Order block trades into it here, rips higher. Fair value gap digs into it here with an order block. Rallies again, buy side taken. Here, false high, drops back down the last hour of trading between 3 o'clock and 4 o'clock. Order block extended through. Why this one? Because we're not supply and demand, we cut through candles. This is the most significant price point. This one here. Last 2 down closed candles. Through this price action, hits it here. Last hour macro comes in right when you're expecting it to. Rallies up, takes the buy side out. Bam! Hits the 40.38 and 3/4 level. Go back to the beginning of the discussion for ES and see what that is on the daily chart. That's where you derive it from. And that, my friends and neighbors, is going to be it for today. I hope you had a good week with me. I'm closing shop early, so Thursday's trading and Friday's trading. I might do some personal trades and then may show you like a short little vignette type thing. But as far as like YouTube videos, I got to rest a little bit more, okay? Because we're coming up close to when I'm going to be really delivering on a day-by-day basis. So I'm trying to enjoy the time, even though I'm trying to keep myself close to the marketplace and not get rusty by staying away from the market for a few weeks. This way it keeps me close, keeps my finger on the pulse of market sentiment and order flow. And then we'll see what we get. So if I do something tomorrow in trading, and I can record something, I will. If I can't, I'll try to do something on a Friday. And then otherwise, we will talk on, I guess, a Shotgun Saturday on Twitter. Until then, be safe.